RBA's first half headline earnings per share swung to a profit of 0.44 cents. This from a headline loss of 0.26 in the previous comparable period. Joining us to unpack the numbers this morning is AJ Rothman. He's CEO of RBA Homes. Thanks so much, AJ, for joining us this morning. Well, we were talking about the commercial property space just ahead of the break. Let's shift focus to the residential space and just what kind of operating environment a player like RBA Homes is having to contend with.
Well, it's not easy out there. We are seeing improvement, though, in availability of finance from banks. Standard Bank and FNB have been quite active over the course of the last year and a half. And we've seen the other banks, ABSA and particularly Nedbank, now coming more into the market. So we are seeing improvements, and certainly private sector credit extensions off the very, very low numbers that it was during the peak of the crisis. So we don't expect dramatic improvements in availability of credit. And our clients, I think, still are struggling with high levels of debt. So,
who exactly is your customer base? I mean, are you looking at government or a customer in terms of an individual basis that you deal with via the banks?
We tend to look at the individual client, somebody who's earning somewhere between 10 and maybe 20,000. The house prices that we target ranges from about 270,000 up to maximum about 600,000. That's the kind of market that we're talking about. So
there's historically been a bit of a problem, because on the one hand you've got people who are subsidised because they earn less than a certain amount,
yes,
and then you've got people who earn more than a certain amount and can afford, although the lowest end of affordable still seems very high,
yes,
for a lot of civil servants and that sort of. So there was that gap of people in between who are actually earning reasonably well but didn't qualify. I mean, surely for you, your business model, government has said that 15,000 is the limit. How does that change from the previous one? I mean, that model is crucial for you.
Yes, look, I mean, on different projects and in different areas, we increasingly, we make strategic decisions about should we go down, below the 300,000 market. There's some big players there. It's a slightly different market to the one we've traditionally targeted. But there's a new board and we're re-looking at our mix of product. The issue below 300,000 and the new subsidy that government is offering in that area is still in the process of being rolled out. So there's very few projects that have actually qualified and where people are starting to kind of get those subsidies at this stage. It's the process that we're hoping to see go make an impact going forward.
You mentioned a new board. It's there's alliance. Everyone involved with the company seems to have either changed position or left, or there's someone new. What's happened there?
Well, I think that David, the previous CEO, did a fantastic job in taking RBA from being a very small company, from the early days of the business, and growing it into a medium-sized business, doing the listing, and then I think seeing the company through the very tough time through the recession. And now we believe that we need new ideas and a new management group to take it from being a medium-sized company to being a large company. I mean, you mentioned the financial results. I mean, when we're making an operating profit of 7 million, small numbers, interest costs were almost that number, so it was pretty flat results, and we need to find ways to really almost gear the operations in the business now to take the company to a different level, and that's the new
just how
team.
much of a shift and change in strategy should we be expecting from RBA moving forward?
Well, I think the very first thing that we're going to focus on is bringing down debt and really improving the top line. So a very big focus on sales and marketing. Some of our competitors have got ahead there of us, and we intend catching up and really improving the top line. That's our way of reducing debt. So that's the board met on Thursday, very good first board meeting, and we've taken a number of initiatives that we'll kind of implement very shortly to actually improve our marketing performance.
You said sales was disappointing,
yes,
in your marketing, so clearly there's got to be an effort there. Houses completed, 325 houses, which doesn't sound like a lot, but it's 325 more than were there before.
Yes.
21% more houses than the year before, yes, but only revenue of 11% more, so yes, you're still getting that relationship right.
Well, this is the issue, is that there's a lot of operational gearing in this business, and we really need to improve the level of sales. And when you do that, it really does make a dramatic difference. The second half of this year, we've got two very big, or relatively big projects for us coming through in Southern Gateway, in Polokwane, and Kirkney in Pretoria. And that will put another 260 houses that were pre-sold in 2010 and 2011. And so what you'll see there is a lot more cash coming through, hoping to pay down a significant amount of debt in the second half, and then at the same time use that cash to put ourselves in a position where our marketing and sales performance improves into next year. So next year we can really test the strategies that we're going to be putting in place now. The second half of the year is going to look good anyway, simply because of historic sales.
Where there's such a focus on sales moving forward, to what extent are you expecting margins to come under pressure? I mean, that is a problem that players in the construction industry are, experiencing in a very big way. The more competitive their business becomes, the more pressure their margins come under.
Yes. Well, I think you're 100% right there. We've been very careful not to increase prices in the last while, and we have seen some increase in costs, so that will put us under pressure. But I think in this business there's lots of opportunities to improve the costs through much higher efficiencies, procurement strategies and so on. So we're looking forward to implementing those.
We were talking to Vunani a moment ago about their model where refurbishment is an important part of their redevelopment and so on, and they make money out of it. You talk about a complete process, which sounds like it's a competitive advantage. You buy the land, you get the town planning approval, you arrange the bonds. I mean, that sounds good, particularly at the lower end of the market where people are busy, they're working hard, and perhaps not as sophisticated as the upper end.
Yes, look, I mean, you have to extract value across that entire chain if you're going to be competitive in this market. So all the major players really have a lot of those activities in-house. It's the only way to really compete, I believe.
Yeah.